Hi, this is Timothy Schutte with Exit Realty Capital City and the Timothy Schutte Real Estate Team. Thank you for coming back to my YouTube channel. Today we have JC Diaz with us again. We're going to talk about some more current events about coronavirus and interest rates and the changes that have been happening in the last few weeks. One of the things that we have seen is the coronavirus having an effect on the market. The federal funds rate, they dropped 50 basis points, and it kind of looks like they're going to be doing that again. But what does that do to our interest rates? And JC, what's happening in the mortgage market right now?
Well, thanks, Tim, for having me in this episode. So interest rates crazy low. Everybody's talking about the coronavirus and what that means for interest rates is that we are experiencing some record interest rates, probably the lowest ever in the last 10-year period.
It is historical low for even longer than that, I believe.
Yeah,
right?
And even experts are saying that for 30-year mortgages, interest rates could fall below the 3%.
Because you've quoted a few people at 3% for a 30-year.
I've quoted within the last couple of days. I've quoted 3% at 30-year fix. In 15 years, we're in the twos. So
interesting. So what does that look like for like a $200,000 mortgage for purchasing power? If you kept the payments the same between, is that 200 and 250 for the same payment, or what does that look like?
Well, anywhere between 220, 250, depending on other variables, of course.
Okay.
But a credit score, for example, is a big. We've talked about credit before. That has a significant impact on the rates as well. On the rate.
If somebody was quoted at 4%, what is that? About a month and a half ago.
So about a month and a half ago, we were at 3.875 to 4%.
Okay.
That was the average rate. They kept dropping, over the last couple of weeks, and of course now with the coronavirus, as a way to stimulate the economy, we're seeing some very nice interest rates.
So JC, the rates have been dropping. The federal funds rate dropped. How are those tied, and how does the federal funds rate work with the mortgage interest rates?
Yeah. Well, they're not the same. But they have an indirect impact on the mortgage rates. So the Fed's dropping the rates, early on this week, 2 weeks before they typically meet to decide what they're going to do with the rates. They know that the coronavirus is having a significant impact, or may have a significant impact on the economy. They drop the rates. What that means is that it's cheaper for banks to borrow money, right? They have an indirect impact on mortgage rates because hopefully it'll be cheaper for buyers to purchase a home. When it comes to the interest rate.
The stock market really is when money flows out of the stock market. I feel like it flows into the mortgage-backed securities.
That's correct.
Which is what lowers the mortgage rates. When you see a stock market dropping, that's when their interest rates drop.
Correct.
Now the federal funds rate is more tied to commercial mortgages, I feel like, on that shorter term note.
Correct.
That's correct? Okay. And so that's what you're kind of looking at. So a commercial mortgage is going to drop when the federal funds rate drops, but the residential mortgage is more so when the stock market falls and that money flows into the mortgage-backed securities.
Correct. And obviously with low interest rates, it's a much better opportunity to get into a nice home, and the purchasing power goes up because of the difference in the interest rates.
And the debt-to-income ratio.
Correct.
Yep. Gotcha. Well, thank you for coming to my YouTube blog. This is Timothy Schutte with Exit Realty Capital City and JC Diaz with Movement Mortgage.
Thanks for having me.
Absolutely.